You and your partner both work full-time, two jobs, two salaries, and somehow at the end of every month, you're still broke. You're not imagining it. You're not bad with money, and you're definitely not alone. There's a name for what you're experiencing. It's called the two-income trap, and it's quietly destroying the financial lives of millions of dual-income households across the country. The worst part? The more money you both make, the deeper the trap gets. Today, I'm going to show you exactly why this happens, how it sneaks up on you, and most importantly, the steps you can take right now to break out of it before it breaks you. By the end of this video, you're going to understand the hidden financial trap that hits couples hardest when both partners are earning, the 5 specific ways a second income quietly drains your household wealth, and a clear, actionable plan to restructure your finances so two incomes actually work for you instead of against you. No fluff, no filler, just the truth your bank account needs you to hear. Let's get into it. Reason number 1. Lifestyle inflation swallows the second income. The very first thing that happens when a second income enters the picture is lifestyle inflation, and it happens so gradually you barely notice it. You move into a bigger apartment because, hey, you can afford it now. You trade in the old car for a nicer one, both of you. You start eating out 3 or 4 times a week instead of 1. You subscribe to more streaming services, upgrade your phone plans, take better vacations. None of these decisions feel reckless in the moment. Each one seems totally reasonable given your combined income. But here's what's actually happening. You're raising your baseline cost of living to match your new income level. So instead of banking that second salary and building wealth, you're burning it maintaining a lifestyle that now requires both of you to keep working. The fix? Before you spend a single dollar of that second income, sit down and decide what percentage goes directly to savings, investments, or debt repayment, automatically, before you ever see it. Treat lifestyle upgrades as rewards you earn after you've hit savings milestones, not as immediate entitlements. Reason number 2. Childcare is eating your second paycheck alive. Here's a number that'll stop you cold. The average cost of full-time childcare in the United States is between $15,000 and $30,000 per year depending on where you live. In major cities, it can easily hit $40,000 or more. Now think about that. If the lower-earning partner brings home $45,000 a year after taxes and childcare costs $25,000, you're netting $20,000 for a full year of work. That's roughly $385 a week before you factor in commuting costs, work clothes, convenience meals, and the mental load of managing it all. For a lot of families, one partner is essentially working to pay someone else to raise their kids. And that's not a moral judgment, that's just math. The fix isn't necessarily to quit your job. The fix is to actually run the numbers. Sit down with your real take-home pay after taxes, subtract childcare, subtract commuting costs, subtract the convenience spending that comes with 2 busy adults, and figure out what that second income is actually contributing to your household. The answer might surprise you. Reason number 3. Your fixed costs have locked you in. This is the sneakiest part of the two-income trap, and it's the reason it becomes so dangerous. When you're living on 2 incomes, lenders, mortgage companies, car dealers, credit card companies look at your combined income. They use that number to determine how much house you can afford, how much car you can finance, how high your credit limit should be. So you buy a house that requires both of you to cover the mortgage. You finance 2 car payments. You carry balances that assumed both of you would always be earning. And then life happens. One of you gets laid off, or sick, or pregnant, or burned out. And suddenly your fixed monthly obligations, the mortgage, the car payments, the minimum credit card payments, don't shrink just because your income did. This is when people lose their homes. This is when marriages crack under financial pressure. This is when a temporary setback becomes a permanent catastrophe. The fix is to build your life around 1 income, not 2. Whatever you earn together, structure your essential expenses, housing, transportation, insurance, debt payments, so that they could be covered by the higher of your 2 salaries alone. Use the second income for savings, investments, and discretionary spending only. This gives you a real safety net. Reason number 4. Taxes hit dual-income households harder. This one flies under the radar for most couples, but it's costing you real money every year. When you file taxes as a married couple, both incomes are combined. That pushes you into a higher tax bracket than either of you would be in individually. It's called the marriage penalty, and it's built into the tax code. Here's a simplified example. If one partner earns $60,000 and the other earns $55,000, you're reporting $115,000 in combined income. That combined figure gets taxed at higher marginal rates than if both partners were single filers at those same income levels. On top of that, a second income often pushes households above the income thresholds for valuable tax credits, like the child tax credit, earned income tax credit, and education deductions that single-income families with the same number of kids still qualify for. The fix is to get serious about tax strategy. Max out both 401k contributions to reduce your taxable income. Use a health savings account if you're on a high-deductible health plan. Work with a tax professional, not just a filing service, to identify deductions specific to your household. A few $100s in tax advice can save you thousands every year. Reason number 5. The second income creates a false sense of security. When money is coming from two directions, it's easy to feel financially invincible. 2 salaries, 2 safety nets. What could go wrong? Everything, actually. Because 2 incomes create 2 sources of potential job loss, 2 health insurance situations, 2 commutes, 2 sets of workplace stress. And because you've likely scaled your lifestyle to match both salaries, losing either one isn't just an inconvenience, it's a crisis. Studies consistently show that dual-income families carry more debt than single-income families at the same household income level. They save less as a percentage of income, and they have thinner emergency funds relative to their monthly expenses. The confidence of 2 incomes leads to complacency, and complacency is expensive. The fix is to never let a second income replace your financial discipline. Maintain an emergency fund of 6 to 9 months of total household expenses, not just one person's income. Carry adequate life insurance on both partners, not just the breadwinner, and review your household financial plan at least twice a year, together. All right, you now understand the trap. Here's exactly what you do about it. Number 1, calculate your real second income. Take the lower earner's gross salary, subtract taxes, subtract childcare, subtract commuting costs, work clothes, convenience meals, and any other expenses that exist because of that job. What's left? That's your actual contribution. Number 2, audit your fixed costs. Add up every non-negotiable monthly expense, mortgage or rent, car payments, insurance, subscriptions, minimum debt payments. Now ask yourself, could the higher earner cover all of this alone? If the answer is no, you have a vulnerability you need to address. Number 3, set a second income rule. Decide right now that a specific percentage of the second income, I'd suggest at least 50%, goes directly to savings or investments before it touches your lifestyle. Automate this transfer so it happens without willpower. Number 4, build the real emergency fund. Not 1 month, not 3, 6 to 9 months of full household expenses in a high-yield savings account separate from your checking, non-negotiable. Number 5, optimize your taxes. Book a session with a CPA or tax strategist before your next filing season. Max your retirement contributions. Use every legal deduction available to your household. Stop donating money to the IRS that belongs in your pocket. Here's the truth most people won't tell you. 2 incomes should make you wealthy. They should build generational wealth, eliminate debt faster, and create real financial freedom. But only if you're intentional about how you use them. The 2 income trap isn't inevitable. It's a choice. Or more accurately, it's what happens when you let lifestyle creep, fixed costs, and financial complacency make choices for you. Now you know better, so start there. If this video hit home, subscribe right now, because every week I'm breaking down the money traps nobody warns you about and the real strategies to avoid them. Drop a comment and tell me which of these 5 reasons surprised you the most. I read every single one, and your answer genuinely helps me know what to cover next. And if you know a couple who needs to hear this, share it with them. It might be the most valuable thing you do for them this year. I'll see you in the next one.